Okay guys, welcome to this webinar. The topic is how to use 15 minutes time frame to take entries and exits out of the market. 15 minutes time frame when you're doing analysis on H4. H4 is your time frame where you will be planning the trade, and then entry and exits will be on 15 minutes time frame, which is like pretty much top bottom analysis. Again, it is going to be a very small, very short webinar. The reason is that I have a lot of work to complete tonight for my meetings tomorrow. But again, I'm going to show you at least 3 examples of how I will take a trade entering and analyzing for H4 and entry on 15 minutes precisely. Again, whoever has completed my lecture 2 guys, first and second lecture, know the rules. All you have to do is now to apply those rules on 15 minutes time frame. Again, those who are on lecture 1 has to wait to complete lecture 2 before they begin trading like this. So please do not try by yourself. If you have completed lecture 2, then yes, by all means you can try and execute this on the charts. Remember, if you understand the price action as a trader, your objective is to follow the price. If the price is going up, you're buying and you're going behind the price. The price is going down, you're selling and going behind the price. So if you understand the nature of the price, remember, you understand the nature of the price, then you can follow the price effectively. Imagine you had to follow something. The more you knew about that thing, it becomes easier for you to follow effectively. Make sense, guys? If it makes sense, please say yes. Just type yes, all of you. So again, my training is that I train you to understand the price action, become acquaintance with the price action, become friend with the price action, become boyfriend or a girlfriend, whatever you want to say it. You need to get used to it, and you need to get her used to you. The more you acquaintance with the price action, then you stop guessing. Again, remember, our training is divided into primary analysis. The first 2 lectures, which is price action analysis, which teaches you how to follow the price. And the second part of the training, which is Fibonacci, which is expansions, retracements, which is harmonic and chart patterns, are secondary analytic tools, which teaches you how to predict the market, how to anticipate the market, how to project the markets, guys. Remember, following the market is certain, it's definitive. There's no guesswork. On the other hand, the secondary analysis projection is uncertain. There is guessing. There you are anticipating the price. And again, remember, we will always trigger the trade by the rules of the price action. Always trigger the trade by the rules of the price action when the price begins to move. When the price begins to move. And we will be using the secondary analytic tools, Fibonacci expansions, retracements, harmonic patterns, chart patterns, to establish a directional bias, guys. But it doesn't mean that you will be trading using a directional bias. Elliott wave certified traders, when they do the analysis based on Elliott waves, they don't execute the trade until the price start moving in their direction, which is the entry by the rules of the price action. So you need to completely understand the relationship. One, execution is very important. The balance is very important, guys. And that is why this is the basic training course that I devised for you guys for your better understanding. Okay, let's come to this training again. We will be analyzing H4 and an entry on 15 minutes time frame. I'm going to show you 3 examples. My advice is, once you finish this lecture, you need to practice this. You need to practice, and you need to send me at least 50 charts, guys, analyzing H4 and an entry on 15 minutes time frame, highlighting the candlestick. Try this weekend. You got Thursday, Friday, Saturday. Market's not going to move much. Market is trying to observe the news of the testimonies from the members of the Fed in US Congress. That will continue tomorrow, guys. So my advice is to stay out of the market or enjoy the market. Do not rush taking the trades. Let them speak up. Let them speak, set the tune for the dollar for next week. And it seems like they are saying a price hike is expected, rise in interest rate, which means strength in the dollar in near term. Okay. So my advice is watch this webinar and practice. So guys, do you understand this? If so, please say yes, all of you. Okay, this is this is guys the professional markups that I teach you at the end of first lecture. All of you knew about the professional markups. Those who already have completed lecture 1, please say yes. And those who are still studying will eventually learn precisely how to mark your charts just like me, which I call them professional markups, guys. These are better than quarter theory, by the way. Quarter theory is not a definitive science. It's based on assumptions that human beings will react to a certain psychological numbers. Again, that is 60% good, but our way of analyzing and identification of institution levels is 85 to 90% certain. Again, you knew, if those who are studying from me precisely know what I'm talking about. Again, so guys, do you understand the professional markups? Can you understand the markups that I did on my charts, guys? Please say yes if you understand them. Zones on weekly, point of reactions, and then go to point of daily time frame and point of reactions and point of failures there. Remember, keep your charts neat and clean. Say yes, all of you. We went to the daily time frame, guys. I'm analyzing the daily time frame right now. It's pretty easy. The price is at a resistance. Again, price began its journey from this journey destination at 0.7356. and it continued the journey to 7.8. The price is at a substantial level at this stage. Can you see this, guys? On a daily time frame, the price has been testing this level previously and has been rejecting. Again, the price is at a resistance. The price is forming double top here. The price went up, rejected, came down and went up again. Right now we got shooting star formation. So let's consider first of all the daily time frame, guys. The price is in a clear uptrend. Can you see this uptrend? Remember, unless the price remains in this channel, it's an uptrend. Everybody understand this? Please say yes. So let's identify what is the trend. It's the trend on the daily time frame is an uptrend. Okay, it's an uptrend. Breach of this trend line can resume a retracement to the downside, and the price first objective will be 75.22, guys. This level. Do you understand this? Everybody understand this, right? I'm using pure price action. I'm not using Fibonacci expansions and retracements. Guys, I use Fibonacci expansions here. Fibonacci expansions, by the way, I'm going to show you quickly what is these Fibonacci expansions I've been using from previously for a few months now, and they have been very effective. Again, this is A, that's B, and that's C, guys. Do you understand this? This is in the long term. That was in the long term. Everybody understand this? Please say yes. Okay, let's keep the secondary analytic tools on the side. Let's precisely focus on the price action here. Okay, guys? Okay, again, the price is at a significant level. Let's analyze a daily candlestick first. This is something that you should be doing every day when the daily candlestick closes, guys. Every day. Every day you have to analyze a daily candle close and see what is going on. Again, precisely the trend is to the upside, right? Pretty clear. The trend is to the upside. Remember, if trend is upside and the price is in this channel support, guys, this is always a buy trade. It's not a sell trade. The sell trade execution will take place. You need to make a precise plan of trading, intraday trading plan, guys. It's an intraday trading plan. So this is the first plan of action. We will be selling this if the price breaches the trend line, break, retest, and a bearish candlestick before we take an entry. Three things: break, retest, but that's not enough. You need a third thing, which is a bearish candlestick formation. Again, I'm trying to show you with a simplistic manner how to enter and exit and hold the trade. I'm not making it complicated, and this is not how I trade, by the way, guys. I control the equity when I trade. I don't trade with the stop loss. I control the equity, hence my profit taking is pretty huge. Again, guys, that's not the way you should be learning. You should be precisely learning the rules of price action using the stop loss, money management, risk management. You have a business plan. You make 100 pips every week. You have a grand investment. You'll make 100 grand, 116,000 pounds. You have 5 grand of investment. You make 564,000 pounds. So, unless you're not making that sort of money, then you need to precisely listen to what I say. Make sense? Say yes, all of you. So I'm making a trading plan for tomorrow, guys. Let's see precisely. They say make a trading plan. That's what they say. This is a business, has to be a trading plan. Now you do this analysis after the daily candle close and before the Asian session begins. So once you do this analysis, right, and then you identify your possible entries and exits for the following day, for the next 3 sessions, you're not going to remark your charts again during the course of the sessions. You're not going to interfere with your markups, with your entries, with your analysis that you've done the night before. The reason is when the market is moving, emotions runs high. Makes sense? You get emotional. You start changing your analysis, your entries based on the market movement. Makes sense, guys? Do you understand this? Say yes, all of you. So this is the first thing. The second possibility will be this, guys, apparently. If the price breaches this, retest, and this is the next. So guys, do you understand the plan of action here? Everybody confirm if you guys understand this. All of you, if you guys understand this precisely.
I do not.
Okay, so the daily candlestick, now analysis of the daily candlesticks, guys. Guys, can you hear me clearly, right? Okay. The price arrives at a resistance, which is a significant level, guys. The price rejected. There was a rejection. I classified this as a shooting star with the bulls inside. The next candle was a hammer. It's a daily. Jason, you need to wait for me to complete this lecture. I'm coming to the entries. This is how you should be approaching the market when you're analyzing the charts. So please listen to me what I'm saying. Precisely, we will come to the stage where I'll be taking the entries. Do you understand this? Okay, guys, the price arrives at a significant level, rejected, the sellers kicks in. Again, the next candle formation, I'm not teaching you how to read the candlestick. I'm going through the candlesticks patterns, make it simpler and easier, but that's not how I learned from Al Brooks, by the way. So the next candlestick, hanging man, the next candlestick, hanging man again, bearish reversal patterns, bearish engulfing candlestick, the next one, guys. Again, there's inside bar, right? Then again in the inside bar, these are tweezers, bearish tweezers at resistance. Then you've got a fulfillment candlestick making a double top formation, seeking more investment. And then you have, let's say, guys, harami. I classify this candlestick as an harami and an inside bar again. And then you have another shooting star, not a shaped shooting star, but it is a shooting star, because if you precisely focus on this, the wick on the upper side is higher. All these candlesticks are showing me the sellers might be kicking into the market. Make sense, guys? It is at the resistance. The price has tapped 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days and had failed to reach the level. Make sense? Do you understand this, all of you? Again, guys, this is just an analysis. We don't trade based on analysis, guys. We trade based on the price movement and we follow the price. But we do establish our directional bias, guys. So I'm thinking maybe the price might breach to the downside. Accumulation is taking place, but it is most likely to be a seller accumulation, guys. Make sense? So everybody understands so far what I've been saying, right? Then to take a sell trade, we need a breach of this trend line and the retest, and that will be our entry. Breach, break, and the retest, and that will be our entry, guys. This will be an entry. This will be an entry, guys. Do you understand this? Entry, buy, or the break to the upside, retest, take an entry. Remember, break, retest, and a candle formation, bullish candlestick for the buying entry and the selling candle formation for the sell entry. Now, this is an analysis that I did on H4 and a daily time frame, guys. So guys, everybody understand this so far? Please say yes. So I already made a plan for the next day entries, right? Now where should I execute those entries? This is the next question. 15 minutes time frame. You go to 15 minutes time frame. 15 minutes time frame. You wait for the price to break the trend line. The price breaches the trend line. The price retests the trend line, breaches, retest, breaches, retest, and then I'm talking about this trade, the break to the downside, breaches, retest, and a bearish candle formation. If that takes place, you can get on the trade. Makes sense? And you can sell the pair on 15 minutes time frame, guys. Do you understand what I said? Everybody says if they understand what I said. Okay, guys, when you turn to 15 minutes time frame, forget the time frame. Forget what time frame you're on. You precisely had to focus what's in front of you. The time frame becomes irrelevant. That's right. Remember, guys, remember in our trading, price action trading, the time frame has no meaning. We trade the price action and the price action remains the same in every time frame. The only difference is on higher time frames, the formation is slow. Things are happening slow. On the shorter time frames, the things happens at a faster pace. Make sense? Does it make sense? On H4 time frame, candle closes after 4 hours. 15 minutes time frame, each candle closes after 15 minutes. Then you have to be proactive. That is the only psychological difference. There is no difference when it comes to the trading. So you don't focus your 15 minutes time. What you need to focus on is what in front of you, guys. Does it make sense? It's significantly important. A lot of people ask me the question, how do we scalp? There's no difference between a scalper and a high time frame trader, price action trader. The only difference is the psychological strength. A scalper trading on 15 minutes will be entering and deciding it's his trades on every 15 minutes, right? He might be having losses after 15 minutes intervals. So he's psychologically strong to restore himself and get on with another trade. But on the other hand, a trader trading on a daily time frame in H4 has 4 hours to restore himself from another trading loss and then take another entry after another 4 hours. Make sense? So the only difference will be that things are happening at a faster pace on a shorter time frames, guys. Do you understand this? If you understand, please say yes. All of you. Okay, so you will be taking entries on 15 minutes time frame, guys. You go to 15 minutes time frame like this. Now all you have to do is now, guys, you need to wait for the price to act on 15 minutes. You already have a trading plan in place, right? You have a trading plan in place. All you need is an execution, pretty much execution. So I want to see if the price breaches, the price break on 15 minutes, right? And make a double bottom formation, clear 15 minutes on the time frame, break, retest, double bottoms formation, rejection, bullish candlesticks. I will be buying this, guys. Make sense? So I want to see this happening on the 15 minutes time frame now. Make sense, guys? And I want to see this on 15 minutes time frame, guys. Guys, if it makes sense, all of you say yes. Now let me tell you the advantage of this when you're entering on 15 minutes time frame and analyzing H4 time frame. Okay, this is the advantage. Remember, we are trading H4 time frame. We are trading not 15 minutes time frame here. We are trading H4 time frame. Nicole, that's fine. I will send you the recording. You can, it's fine. You need to go for the interview. That's fine. I will send you the recording. That shouldn't be a problem. Okay. So you are trading not 15 minutes time frame here, guys. Remember, you are trading H4 time frame. What time frame you trading, guys? H4. You're not trading 15 minutes time frame again. You will be deciding either to get off the trade or stay in the trade based on H4 candle formation. The entry and exit is only on 15 minutes time frame. I'm going to show you practical example of this in a second, but try to understand again. The 15 minutes time frame is only to enter and exit. To analyze if buyers are entering into the market or sellers are entering into the market will be decided on what time frame, guys? H4 candle formation. Do you understand this, all of you? Please say yes if you guys understand, because I'm going to show you the practical examples of this, precisely how I trade. So you are trading H4 time frame, means your average trade will be from 60 to 120 pips, right? 60 to 120 pips. But here the advantage is your stop loss will be somebody trading on 15 minutes time frame, which is not more than 25 to 30 pips. Make sense? Look at the stop loss. Exactly, precisely. Annan, your stop loss becomes 15, sometimes 16, 17 pips. Sometimes 20 pips, not more than 25 pips. And remember, the time frame you're trading is what? H4. Again, guys, try to understand something. If you're trading H4 and you're entering on H4, your stop loss has to be what? 65 pips at least. 40 to 65, 40 to 75 pips. That's what the average stop loss in H4. Now you're entering and exiting the trade on 15 minutes time frame, like somebody scalping on 15 minutes here. his stop loss will not be more than 25 pips, guys. I normally have 17 pips or 20 pips stop loss. Make sense? Because invalidation will take place if the price returns back to this resistance, back into this support level, guys. You will get out of the trade based on 15 minutes candles formation, not on H4 candle formation. If it makes sense, please say yes, all of you. So entry and exit will be 15 minutes. Then once you enter the trade, to decide either you're going to stay in the trade or exit the trade will be based on H4 candle formation. I'm going to show you practical demonstration of this, but I want you to understand the concept, guys. So you're not analyzing either to stay in the trade or exit the trade based on 15 minutes. No, this is on H4. The entry is only on 15 minutes, guys. If you understand, please, all of you say yes before I show you a practical example of this. All of you. Let me know if you guys are enjoying this or I shut myself up. This is your marriage gift from me. I'm giving you this marriage gift. Enjoy this webinar. Guys, let me tell you something. You trade like this, your risk and reward will be what? 120, guys, 116. Remember, always analyze higher time frames for trading opportunities, because that's where the real story is. It's just entering on a smaller time frames. You are a bloody scalper who is not just scalping a shorter risk and reward ratios. You are scalping bloody huge risk and reward ratios based on H4 analysis. Make sense? Just imagine you can have 6 losing trade. You just need 2 winning trades to be 200% in profit using this method. Make sense? I had trained you intentionally first on H4 analysis, H4 entries, then take you to H4 analysis, H1 entries. So you develop that psychological strength, the mental aptitude to trade. Do you understand this, guys? Hence, I don't straight away take you to 15 minutes time frame. The reason is you need to get used to the things happening at a faster pace. If you cannot trade on H4 and entry on H4, forget you can trade on H4 and 15 minutes time frame on H4 and H1. The reason is things are happening at a faster pace. Make sense, guys? Okay, I'm going to show you 3 examples of entries, by the way. So let's consider the first entry, guys. Let's consider the price arrives at this level, right? The price arrives at this level. Everybody can see this, right? So I will have this trend line. Those who are studying from me precisely know. Those who are going to start, I'll show you. They will eventually learn in due course, guys. Everybody can see this, right? So we are starting our analysis, guys. This is an analysis which I'm going to do is it's a real market analysis. The reason is it's not in hindsight, because I'm going to decide to stay or exit the trade based on candle by candle analysis. Do you understand this? Candle by candle analysis, precisely the way you will be trading on the live markets, guys. Candle by candle analysis. Do you understand this? All of you. David, you understand this, right? Candle by candle analysis, precisely, guys. So it's literally you're trading in the live market. Precisely, you're trading a live market. There's no difference in my analysis and the live market you're trading. And this is why I say practice this 100 charts on 100 charts before you even go to the demo training in my training, because the more you practice, the better you will be trading the live accounts. Do you understand this, guys? So let's see. I'm going to do this. So the price is here. Let's begin my analysis from this candle formation. Okay. Everybody can see this shooting star, right? The shooting star can see this. Everybody can see this. Please confirm if you guys can see this, right? I'm going to start my candle by candle analysis on this. Just see this. Okay, I've got a shooting star. I will not take a trade. I will wait and see if I have a buying opportunity or a selling opportunity here, guys. To see this, the situation is this, that the price is testing a support level. This is going to be the third test, right? You see this, guys. You had this, this. Now the price has tested again. Can you see this, right? So after this H4 candle close, the question is, always ask yourself a question. Shall I take a trade? Shall I not take a trade? If I'm already in a trade, shall I stay in the trade or exit the trade? Three questions you have to consider on every H4 candle close. Shall I take a trade if I'm not in a trade? Or if you're in a trade, these two questions. Shall I stay in the trade or should I exit the trade? Make sense, guys? All of you say yes if you understand this. Three questions to consider. Be honest in responding to yourself. Be honest. This is pure price action. This is how one of the world's biggest banks, hedge fund traders, trades, guys. So please listen to what I'm saying. This is the basics. This is the basics, guys. I'm setting your basics right. Imagine the day I'll set your advanced right. How good you will be in advanced analysis. The basics right, it'll make you a millionaire, give you a living to live. So don't listen to the bullshit and crap outside. Precisely focus what I'm teaching you here again. Now, guys, on this candle formation, the question is, shall I take a trade? Shall I not take a trade? I'm not in a trade right now. Give me an answer. Anyone, what do you think? Shall I take a trade on this H4 candle formation? No, that is right. The price has tested for the first time a support, right? Previous candlestick showing rejection. So this is rejection. Seems like there is a fight between buyers and sellers and the buyers did kick in. You understand, guys? But the price is testing. Let's see the next candle formation. The next candlestick is an inverted hammer on support, guys. Literally. It's a bullish reversal pattern, by the way. This is a bullish reversal pattern, but you would not take a trade. The problem is that the price is at a resistance, not just on a support, guys. This is a resistance. Make sense, guys? You understand this, right? This is a resistance. So I will classify this as a shooting star based on this resistance. So the next candle formation was a dirty shooting star, right? Let's do the reading. Buyers pushed the price up, sellers came in, sellers pushed the price down, and eventually you have this huge wick showing the significant loss by the buyers. The seller seems in control. The previous candle was a bearish engulfing, also showing the control. It means the sellers are kicking in at a substantial resistance level, which is one of the fundamental resistance level point of reactions on a daily time frame, guys. If you understand what I said, say yes, all of you. So I will not get into the trade. After this candle formation, what is next? Two questions to consider. If the price, I want to see, let's say, this is the trading plan. Let me show you my trading plan, guys. Break, retest, entry to the downside. And you'll always be doing the same thing. Repetition every day. If you want to be a successful trader, your entries and exit will not be different than this. Make sense, guys? Do you understand this? This is my execution trading plan, but that's what the plan I have made for myself. So I will be taking a short trade on the breach of this trend line break and the retest and an entry short. Bearish candle formation, I'll kick in with an entry short. And if I have to buy this, right, I want to see a price holding above the support level, guys. And I want to see what? I want to see what, guys? Double bottoms, bullish reversal candlestick, buying to the upside. Do you understand this? That's right. Okay, I've made a plan, right? So I made a plan. So everybody understand the trading plan now. The price is at a substantial level. We made a trading plan on H4. Everybody understand? Say yes, all of you. It's pretty easy, and I'll tell you exactly which pairs to trade. You trade those pairs on which the price is at a significant level, ready for the breakout. Pretty simple. Okay, so the price is at this level, right? So this is H4 candle close. Shooting star, right? Sellers in full control, right? And the price is about to either break or retest, right? Break or retest. Now, guys, this is where it is likely that the break will happen or the retest will happen. Sorry, my apologies. Let's consider H4. Yes. Good, Zafar. Good. Thank you. Thank you. I was so lost, actually. You can trade daily and 15 minutes entries, by the way. There's no difference, by the way. There's no difference. Okay, the price is finding support, guys. Can you see this? Right? Can you see these candle formations? We are hammer, we have hammer, we have hammer, guys. Price is finding support. The question is, should I buy or sell? Let's do our markups, guys. Right? This is the resistance, right, guys? Everybody agree? This is the resistance that you will be marking, the trend line resistance. If everybody agrees with me and understand why did I mark this, say yes, all of you. I need you to understand this and confirm if you understand this. Okay, the question is, shall I buy on this candle formation? This is a question to consider. My response is absolutely not. Remember, the price is like a fish. Like fish moves in water, the price moves between what? Support and resistance, right? So if the price is here and I'm buying here, the problem is there's a resistance right after 15-20 pips, right guys? And it's an H4 time frame that I'm trading. It's not a good risk and reward ratio. Make sense? Make sense, guys? Everybody understand? So I don't want to buy this, first of all, the first reason. The second reason is there's a resistance right on the head, guys. You can't have a trade. You might have a trading opportunity up till here. But remember, for this trade to trigger, you want to see this happening. This is your trading plan, guys. Make sense? You want to see at least the break of this trend line. Without a break of this trend line, it's not a trading opportunity. And again, guys, I would not like to buy on this trade. Even regardless, I don't like to buy this. You'll still make some money out of it. But remember, because I like good risk and reward trades, you don't just jump onto every break and retest. Make sense? Again, yes, that's right. Again, so the problem is we will not be buying unless we have a breach of this, right? But we will be selling if we have a breach of the trend line underneath. Make sense, guys? Everybody understand this, right? So the price is here. Now, anything is about to happen. The break to either side can happen anytime. Yes? Yes? Okay, great. You go to 15 minutes time frame now straight away. And guys, my advice is always have two charts open. It's pretty easy. If you pay for the trading view, you can have two charts at the same time. You can divide the screen in two charts. So one screen in H4, the next is 15 minutes. Make sense? It's pretty easy. You don't have to zoom in like the way I did. So guys, can you see this, right? This is where the price is when we are trading. Make sense, guys? When we are analyzing, this is where the price is, right? The price hasn't breached to the downside. Everybody understand this? If everybody understands, say yes, all of you. Okay, now guys, remember, you will forget the time frame now. You 15 minutes, forget the time frame. All you need is a break and the retest bearish candle formation. You will trade precisely, forget the time frame, just trade what you see in front of you. Make sense? As far as the entries are concerned, do you understand this, guys? I'm just using this to take an entry. That is it, not analysis. You see this? The price breaches, break, let the price make a double top formation. Do not jump, because you remember you're on a 15 minutes time frame already. You are zoomed in. You are entering so much earlier than somebody trading on H4. Make sense? So let's say the price breaches, that is the break. Always wait for the break, retest a pattern formation, then you take a trade. Do not rush into the trade. The reason is you already zoomed in. Okay, this is your break, guys. The price came back, right? Break, the price came back. Can you see this, right? So this is where you can take an entry. You can get onto the trade anywhere here, guys. Up to you, however you want to. Make sense? Get H4, we're discussing entry. So all of this area is your entry, guys. There's no buyers, it's sellers accumulation, weaknesses, price making lower high, underneath prices, accumulating orders here, going back, testing the resistance, double top, triple, 4, 5, 6 tops, and then eventually going to the downside. So you take an entry, guys. Where you take an entry? Any of these candle formation, guys. Break, retest means the candle fails to go back in. All these candles had failed to go back in. Do you understand this? All of you understand this? Say yes. And then all of these candles are bearish candle formation. A lot of shooting stars in them. Do you understand this? All of you. Okay, so let's say I have taken an entry. So you have taken an entry. Once you take an entry, then what? Then what? Go to H4. Go to H4, guys. So you took an entry, you went to H4, and remember, guys, your entry will be somewhere on this candle formation. Can you see this? I'm going to show you precisely. Just give me a sec. Your entry will be somewhere on this candle formation, because remember we had taken an entry. So everybody understand what I mean by this, right? Remember that was the breakout and the retest. We took an entry. So you haven't waited for the break and the retest on H4. Remember, somebody trading on H4 would have taken an entry after this break, retest, and somebody on H4 would have an entry on this candle formation. Guys, do you understand this, right? If you're an H4 trader trading on H4 time frame, then this is the break, the retest means the candle fails to go back, and then you might take an entry on the third candlestick. Make sense, guys? But as a trader who went into 15 minutes to take an entry, you would have entered on the first candle. Make sense? Which was even the breakout candle. So your entry was way earlier than the somebody trading on H4. Make sense? So see how small your stop loss will be. 25 pips only, maybe. Make sense, guys? Do you understand this? If you understand, say yes, all of you. Now, guys, I'm going to decide if I want to stay in the trade or exit the trade based on H4, because I'm not trading 15 minutes time frame. I'm precisely trading H4 time frame. So this candle closes, right? Should I stay in the trade or exit the trade, guys? Give me the answer. I should stay in the trade. This is a breakout, right? Breakout. Stay in the trade. I will get out of the trade if the price goes this. This is invalidation of the trade, guys. This is where I'll exit the trade. If the price goes in and then we have a retest, next candle close out inside on H4 time frame, guys. If this happens, you exit the trade. If it doesn't happen on H4, you stay in the trade, guys. Do you understand? Remember, we are trading an H4 time frame. You're not trading H1 or 15 minutes time frame. We are just using 15 minutes to take an entry. All of you understand the invalidation. How we invalidate the trade is the next candle goes in and the following candle closes inside the retest. That is the break to inside. That is the retest. If that happened on H4, get out of the trade, guys. Remember, you're trading an H4 time frame here. So the next candle closes downside, right? This is bearish candle formation, right? Inside bar. But should I stay in the trade or exit the trade based on this candlestick? Anyone? Stay, that's right. Next candle formation. We will be deciding on every H4. All you have to do is to check your phone after 4 hours, every 4 hours, first of all. And secondly, guys, this is what I call controlled trading. This is controlled trading. This is not a trading where you just take an entry and let the market decide the fate. If it goes to the next level, your projected level, you control your trading based on every candle formation. Make sense? Guys, make sense? Okay, great. Then should I stay in the next trade? I'm deciding, asking two questions to myself. Should I stay in the trade or should I exit the trade every after 4 hours, guys? I could be even scalping in between, but remember, my swing trade, I'm showing you an example of a swing trade. You can scalp in between on 15 minutes again and again, guys. If you're smarter, what I'm talking about. But let's consider the swing here. Should I stay in the trade? This is shooting star, in pretty much like a bad equal candles, neutral candle formation. I'll stay in the trade, guys. I will stay in. This is a shooting star. Stay in the trade. Next candle formation fails to close the high of the previous candle. Again, guys, I'll stay in the trade. Next candle formation rises above the previous candle. Again, what is this candle formation? Anyone? Tell me the name. This is the resistance. What is the name of this candle formation? Come on, guys. Come on. What is the hammer? It's not a hammer. It's near the resistance. It's hanging man. Come on, guys. Next candle formation, bearish engulfing. It engulfs the previous candle body, guys, right? Sellers in. I'll stay in the trade. Next candle, inside bar, guys, fails to close the high of the previous candlestick, right? I'll stay in the trade. I will not exit the trade. Next candlestick went up, right? You see this? Went up, tested the resistance and came back. I will not close the trade until the candle completes its H4 time frame, right? It closes and give me a shape first, guys. After this candle closes, right? Should I stay in the trade or exit the trade? I'm telling you, shooting star here. Again, guys, and remember, price can always go back and make double top formation. The reason is the price wanted to attract more orders and hence institutions bring the price down, investors inject more money before the price travels to the other side. But that's a philosophy behind, and hence double tops and double bottom forms. Okay, then what? Next candle, bearish engulfing, right? Next candle, should I stay in the trade or exit the trade? Tell me, guys. Come on, David, what do you think? Stay in the trade or not? That's right. So what about this candlestick? Bearish engulfing candlestick. That's just right, just right. Stay in the trade. What about this candle formation, guys? Rejection on the upper side. Stay in the trade. What about this candlestick formation, guys? Stay in the trade, right? What about this candlestick formation, guys? Stay in the trade. What about this candlestick formation, guys? Stay in the trade. Better. Eventually, and then what you will be doing, if you're smarter, you will develop your trade the way I've taught you guys. This is the break you need. Guys, you can scalp in between on 15 minutes time frame while controlling, watching what's happening on H4 at the same time. Makes sense what I'm saying, guys? You can scalp in between even before this breakout to the downside. I might have scalped at least 100, 200 pips on this exactly, and precisely that's what I do on daily basis. Okay, then the price bridges to the downside, right? Stay in the trade or exit the trade. Tell me, anyone. And then I control the equity. I don't use the stop loss. So my ability to make pips is pretty unbelievable. Exactly. If somebody says I'm a demo trader, I can understand why they're saying it. Because they are not yet the traders. Okay, next candlestick. Shall we stay in the trade or exit the trade? Give me the answer. Yes or no. Stay or exit? I'm not going into detail here. I'm just asking a question. Stay or exit? Okay, great. Just give me a sec. So we are deciding to stay or exit based on each candle formation. Should I stay in the trade or exit? Next candle. Next, all of these candlestick fails to breach the high of the previous candlesticks. You will stay in the trade. And again, guys, you can develop your trade. You can pretty much develop your entries. This is a chart pattern. If you guys know, guys, it's pretty easy. It breaches the downside again. Another entry here. Again, I'll stay in my swing trade. I don't have a reason to close the trade yet. So I'll stay in the trade. This candlestick, should I stay in the trade or exit? Anyone? Stay. What about the next candle? Next candle, next candle. The price arrives at a substantial, significant weekly zone, guys. Should I stay in the trade or exit? Stay, exit or stay. This is the first bullish candle formation, reaction at a significant level. Let me show you where you exit the trade, guys. Pretty easy. You guys precisely know in my training how you exit the trade. This is your exit candlestick. If you're really following a conservative trader, but I might exit based on this formation here, but this is precisely where I will exit the trade, guys. So does everybody understand this? This is a bullish candlestick. That is a follow-up. Remember, guys, what I said, bullish and the follow-up, but here the breach of the trend line is significant, guys. So if everybody understands, please confirm if you guys understand, guys. Let me show you this trade risk and reward, guys, on this trade. Guys, your stop loss wasn't more than, I say, it wasn't more than 25 pips, honestly speaking. And you see how controlled the trade was. The trade that I did was very controlled. I wasn't guessing the market. I was controlling the trade. Can you see this, guys? I was controlling the trade. I wasn't guessing. And precisely if I'm trading the live market, it is precisely like trading a live market. There's no difference between me trading, testing myself on the previous charts or trading the live market. There is no difference. Guys, this is the way you should be trading, and all you need is 3 winning trades out of 10 to become a profitable trader. 3 winning trades out of 10. 3 winning trades out of 10. Trading H4 time frame, guys. Trading what? H4 time frame, guys. Do you understand? Entry and exits on 15 minutes, and then your analysis will always be on H4. Do you guys understand this example? Because I'm going to end this discussion. I don't have time, actually. I need to finish my economic reporting, guys. I have a conference tomorrow. So guys, please tell me if you guys understand this. So guys, I want you to practice this. I want you to practice this. Improve your trading. Improve your trading. This is the simplistic way of trading, guys. Guys, if you're really interested, let me tell you guys, Quinn, the guy from Forever in Profit, normally trades pretty much like this. Okay, he trades like this. So I'm sure you're not wasting your time on spending money on other courses. Instead, you are getting what other trainers are also trading. So he is a better trader. He's an amazing trader. He's a better trader than other members of his organization because he trades like this and his risk and reward is pretty good. Make sense, guys? So he is a good trader. Let me say this. He is a good trader. Again, this is the way you should be trading. Your stop losses will never be more than 25-30 pips. Your drawdown will be small. But again, it's not about just entries and exits. Your entries and exits has to be good, but your control has to be there on the market. And on our trading, we control the market. We control our trades. We do not let the price to decide the fate of our trades, guys. Make sense? All of you say yes if you understand this. Okay, guys, this is precisely the end of discussion. I want you to practice this on your charts. Stop the trading, stop the demo trading. If you are trading, guys, forget it. Whatever you score this week, just book this, right? From today until Sunday, practice this, practice this, practice this, practice this, practice this. 100 charts at least. I'm expecting you to make 100 charts at least and then start trading with this methodology next week and tell me the results. Tell me the results, guys. Show me the results, guys. Your risk and reward increases. This is where you become a trader. The day your risk and reward is increased, the day you will be trading where you do not have the fear of losing the trade, the day you need 2 trades out of 10 to be 100% profitable, this is the day you will become a trader. The day you first become a business opportunity, guys. Make sense? Now, guys, tell me, is there a problem with the scalping on a trading on a higher time frame? There's no difference here. We have combined together both forces to make you even a better trader. And this is a simplistic way, 10% of the way I trade, guys. Again, okay, I'm going to leave a message on Facebook, and I appreciate all of you, whoever he is in this webinar, to leave your remarks and feedback there, guys. Do you understand this? Thank you very much. I hope you enjoyed this webinar, guys. I will be having more webinars next week. But again, guys, next week I plan on 3 lectures, 3 to 4, how you will be developing a trading plan for the next day. So I will be having this 3 to 4 lectures on developing the trading plan for the next day. So when the daily candle closes, before the Asian session begins, we will be analyzing 10 pairs, 5 pairs, guys, and I will be making a trading plan in front of you of those 5 pairs. All you have to do is when the session begins, Asian, London and New York, all you have to do is to wait for the price arrives on your planned levels to take an entries on 15 minutes time frame, guys. Make sense? So remember, as a trader, you don't change your analysis during the day. Once you make your analysis, all you wait for the price to arrive on those levels and then you just take the trades, guys. Do you understand this? So less emotional whilst the market is moving, guys. This is how you have to trade, and this is how your routine has to be as a trader. So I'll try this for next week, 3 days, give you a practical demonstration. You need to get used to it. You need to get used to it. You need to do it on a daily basis, guys, and eventually you will become a consistent, profitable trader. So guys, if you understand this, please say yes, all of you. I hope you enjoy the webinar, guys. I hope it will help you improve your trading skills, guys. Again, I have to say this. Show me 50 grand on your live accounts. I will train you advanced technical analysis, which is Hertz cycle theory, guys, advanced Elliott wave certification, and advanced harmonic patterns. And again, guys, if somebody really make the money, really make a substantial money using my method, and approach me, and if I have time, I will train you at professional training as a trader, which is totally different. Because remember, whoever says technical is a professional training is saying bullshit. Technical analysis is just one of the chapters in which we teaches students how to read the charts, how to take an entry and exits. It's not an analysis. Do you understand this? So when you see people saying technical is just the force, technical is the real trading, it's bullshit. And again, fundamental is not a trading. It's economic reporting is what we do to analyze where the market is heading eventually. This is how we do, guys. And technical is one of the chapters. Fundamentals are one of the chapters that you read, which is part of the professional trading course, guys, which is how we trade. Again, guys, thank you very much for joining me. I would really like to see your remarks on the Facebook. I'll leave the post. Leave me your remarks, guys. Thank you very much. I'll stop the recording. I will take your questions 5 to 10 minutes, guys. Just give me a second.